In the wake of a gigantic sell-off like the one we've had over the past couple of weeks, I always like to search for stocks that are able to hold up better than their peers. Stocks like Buffalo Wild Wings, BWLD, the sports-oriented beer and chicken wings chain with more than 1,000 locations across the United States. This is exactly the kind of largely domestic security play that also benefits from a stronger consumer spurred on by cheaper gasoline. No China. Now, Buffalo Wild Wings had been in a real rut after the company missed numbers when reported in late April. Then the stock bottomed at 152 in June after it announced it would be buying 41 franchise restaurants for $161 million. Then at the end of July, the company delivered a quarter that was much more well received. It caused the stock to roar 11% higher in a single session. Sure, Buffalo Wild Wings may have missed the top line and bottom line, but, traffic was robust. Wall Street loved the fact that the company announced plans to raise prices in the near future in order to offset higher chicken wings and labor costs. Stock kept climbing up $198 a week ago. And even after this big sell-off, it's only pulled back to $189 as of today. It's up 28% when we spoke to the CEO last 13 months ago. So let's check in with Sally Smith, the president and CEO of Buffalo Wild Wings, to hear more about how her company is doing and where it's headed. Ms. Smith, welcome back to Mad Money.
Jim, thank you.
Good to see you. Thank you so much. Have a seat.
Thank
you. We love talking Buffalo Wild Wings, and one of the reasons why we like it is because your company is deeply linked to the NFL. And I'm going to throw you a little curve here to start.
Okay.
We are gigantic fantasy fans right here. You're looking at our team. We also have now gotten the FanDuel, and we've gotten the DraftKings bug, as many people have. Are people going to stay longer and later when the fourth quarter normally wouldn't matter for a win but matters tremendously for those?
I think so, and that's why we have 44,000 draft kits out to all of our restaurants so that you, if you haven't done your fantasy draft yet, should go to Buffalo Wild Wings to do your drafting.
Well, I know my stage manager picked, I'm number 11, and I'm starting to think that because I won 2 Super Bowls, it's stacked against me. Just neither here nor there. Let's talk about something that you have that most people don't. You have pricing power. You've been able to raise the price. There's been no resistance, has it?
Really not. We've been very thoughtful on taking price. Right. We do have different menu pricing tiers throughout the U.S., so in some of the higher cost states, our menu price will be a little bit higher. We always look to that first as we look, but it's really to cover our costs, and we do think we're still a very value-oriented.
Now, I noticed this great purchase of 41 franchises, and that your own stores are doing 4.2% comp. Now, the franchise is doing well, too, but 2.5%. But what's the difference? Because the company-owned stores that you run are really doing fabulously.
I have to credit kind of all factors, operations, marketing, our supply chain, as well as our guest experience department, in really helping us have the right message to the guest. Sometimes the difference between franchise and comp has to do with when we took franchise and company stores, has to do with when we take price.
Prices, exactly.
Franchisees can select their own pricing, make their pricing decisions, so they may take more or less than we do.
Okay, July was strong, as you talked about it. August continuing?
All I can say is we love the start of football season, and we're geared up. We've hired up. We have a great restaurant.
Well, let me ask you. I watched preseason this year stronger than ever. Are there preseason crowds?
There are. I think that desire to get into football is happening earlier and earlier.
That's what I think.
I really do.
Again, I think it's because of the draft.
Yeah.
And I know how many people will be involved. Now, this was a quarter where I actually heard people discuss that you are starting to get bountiful free cash flow. That it's quite different from the old days. What are you going to do with it?
Well, a couple of things. I think, first of all, if we can invest in ourselves, that's the best thing to do.
Okay.
So the buyback of the 41 restaurants in Texas, New Mexico, and Hawaii uses up a good chunk of that, $160 million. It'll be the first time that we actually take on some debt. We've dipped into our line of credit. But that acquisition, once it's paid for, exacerbates the problem. It will generate cash. We will continue to build out about 50 stores a year. We'll certainly continue to remodel. But then at some point, we need to look at our capital and say, okay, what else can we do for shareholders?
Absolutely. Now, how about the, you've got these 2 other special ideas. I've got the taco and you've got the pizza. I'm trying to figure out, you're doing, I happen to be in this Mexican
I know you are.
Food.
Yeah, we've talked about that in the past.
Taco trucks, of which I've actually had to compete against, are doing extraordinarily well. Your taco concept is a similar concept. It must be minting money.
Well, we're in the beginning stages.
Right.
We took.
I know you only do one in Dallas.
Yeah, we've got a couple in Dallas. We have 3 in Minneapolis. The Minneapolis franchisee actually has a Rusty Taco truck, and it has done.
It's killed, hasn't it?
We really think there's an opportunity there.
I've been talking about.
And it's a great food product. It travels and it works well for food
trucks. It sure does. Now, one of the things when I read your conference call, I have to tell you, Sally, I said, oh my, the Fed has to raise rates. You mentioned twice the cost of labor's going up. I mean, is it that tough to find good people right now?
You know, I think you're seeing a combination of things. You're seeing a little more robust job market.
Right.
But I'm also looking at wage rates going up. So you have some legislative actions in different states, in different cities, and that's going to have some cost pressures. Restaurants will figure out how to deal with it. We'll become more efficient technology-wise, but also then can you hire even better people at a higher wage rate?
Okay, and just because I know our crowd is so fantasy-oriented, what do I get in my kit and what happens and why is it fun to go to Buffalo Wild Wings to do your draft?
Well, we have some NFL logoed items in there this year. We also have a reason for you to come back, and that is coupons on food for each of the 16 weeks of the football series. And if you want help in designing your logo, you can go to our website, give us your name, or we have a fantasy football name generator, and we might pick your team to design an NFL-like logo for your team.
Can you get it so that I have first draft and that I win? All right. You never know.
I think you've got to do that yourself, Jim.
I'm looking at our commissioner, and he's just throwing his hands up. That's Sally Smith, the president and CEO of Buffalo Wild Wings. This is the kind of stock that you can buy when China's going nuts and you're really worried about the Fed. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.